All right, let's talk about a really big deal that's happening between the United Arab Emirates and Kenya. They're basically forging a brand new trade corridor connecting the Gulf and East Africa. And, this is way more than just a diplomatic handshake. This is a partnership with a huge number attached to it.
And there's that number, $5 billion. Yep, that's the target for trade volume between these two countries under this new agreement. It's a seriously ambitious goal, and it signals that they're ready to massively scale up their whole economic relationship.
So, a number that big naturally leads to a question, right? What does it actually take to build a $5 billion trade superhighway from scratch? How do you even lay the groundwork for a deal this massive? Well, that's exactly what we're going to break down.
To make this new trade corridor a reality, the whole partnership is built on a formal agreement. It's something specifically designed to remove all the usual friction from trade and investment. And the foundation for it all is an instrument called a CEPA.
So, what in the world is a CEPA? Well, it stands for Comprehensive Economic Partnership Agreement. The easiest way to think about it is like an official rulebook for how two countries do business. The whole point is to make everything faster, cheaper, and just plain easier for them to trade with each other.
So how does one of these things actually work in practice? Well, it really boils down to 4 key steps. First, you start lowering the tariffs, the taxes on goods coming in. Then, you streamline customs so stuff isn't sitting at the port forever. From there, you open up market access for key industries, and, this is a big one, you add protections that make big money investors feel a whole lot safer putting their capital to work. It's all very practical nuts and bolts stuff.
Now for Kenya, this is a huge strategic play. They're absolutely leveraging this partnership to really cement their status as the economic gateway to all of East Africa. And you can see the tangible benefits for Kenya right here. This deal makes the country an even bigger logistics hub, especially through the port of Mombasa. It also gives its farmers and manufacturers way better access to the UAE market. And of course, a formal agreement like this is basically a giant green light for foreign investors who are looking for a secure place to put their money.
But this is definitely a two-way street. For the UAE, this agreement is a key piece of their bigger global strategy, which is all about securing future growth by getting capital into high-potential emerging markets.
Just look at all the boxes this one deal checks for the UAE. They can strengthen their own food security by investing in Kenya's huge agricultural sector. They get a strategic doorway into Africa's booming consumer base. And they find new, promising markets to deploy capital for major infrastructure projects. It's a win across the board.
So when you get right down to it, this isn't a zero-sum game at all. Both sides win big time. Kenya gets a really powerful partner and a direct pipeline to a major global market. Meanwhile, the UAE gets a strategic foothold in one of the world's most dynamic, high-growth regions. It's a classic case of mutual interest.
And this whole model of partnership, well, it brings us to our final section, which is about the bigger picture. A deal like this signals a pretty fundamental shift in how international relations are done. We're really moving into a new era of economic diplomacy that's much more about tangible action.
And why does that matter so much? Well, for large-scale investors, think pension funds, family offices, risk is everything. A formal state-backed agreement like this dramatically lowers what they call execution risk. That's the fear that a deal just falls apart because of politics or a lack of follow-through. This agreement is a clear signal that the basic architecture for safe, long-term investment is locked in place.
So who are the first to benefit from all this? As that new capital starts flowing, you can pretty much bet on seeing the impact across 4 key areas. The banks that are financing all the new deals, the logistics companies moving all the goods, the agribusiness firms that are scaling up production, and of course, the industrial investors who are building out new facilities. And this quote from the source material really just hits the nail on the head. It says that economic diplomacy is now being measured by contracts signed, capital deployed, and supply chains activated, not just by polite statements. In other words, it's all about results, not just rhetoric.
Which leaves us with one last really fascinating question to think about. When you look at its focus on mutual benefit, on practical execution, and on measurable outcomes, is this UAE-Kenya deal the new blueprint for how global partnerships are going to be built in the 21st century? It's definitely something worth considering.